Welcome to the video version of the Pirls Stock Market Commentary for August 28, 2016. Market breadth. With this past week's market advance, our bull-bear point and figure ratio fell to 1.71 from 1.97 last week, continuing in bullish territory. The total count of securities in bullish or bearish patterns decreased 2%, to 3,115. The count of bearish stocks increased 7%, while the count of stocks in bullish patterns decreased 7%. The Pirls PNF Market Breadth Summary Chart shows us a market now 9 consecutive weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the weekly Pirls Stock Market Commentary via email, free of charge, simply enter your email address in the space provided. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 35 points for the 9th decline in 28 weeks. At a positive 519.26 points, it continues below the recently formed August 2016 top, has fallen below the April 2016 top, and continues above all remaining 3 tops above plus 100, and it continues above all 6 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in accumulation mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 3 accumulation days and 2 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on higher average daily volume. Momentum, now fallen to a positive 1.41 from a positive 72.21 a week ago. The CCI 20 daily has formed a zero-line reject long entry signal within the required plus or minus 50 range within a Woody's uptrend begun 6 weeks ago. We will follow the results of this trade simulation in next week's commentary. In Woody's CCI trading system, 6 consecutive bars above or below 0 are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 17 weeks ago, while the daily CCI 20 began a Woody's uptrend 6 weeks ago. The CCI 20 weekly fell to 127.45 from 156 last week after forming a zero-line reject long entry signal for Monday 7/11 open. We will continue to follow the results of this trade simulation in next week's commentary. Industry rotation, the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary, banks and some tech on top, REITs, precious metals, and retail on the bottom. Bullish, computer hardware and semis continue in the top 5. KBW Bank has re-entered the top 5. Gold and silver continues to lead the bottom 5. Oil has left the top 5. Bearish, REITs continues in the bottom 5. S&P Retail has entered the bottom 5. Disk drives have left the top 5. Focus this week from Eric Peters' Autos, Automobiles, Motorcycles, and Libertarian Politics. Another canary in the coal mine. The following are some key points with a chart. Another canary in the coal mine has just dropped to the bottom of its cage. Sales of Chevy's Camaro muscle car and its 2 rivals, the Ford Mustang and the Dodge Challenger, have stalled suddenly, too. As if they just ran out of gas, all 3 of them at once. This after several years of double-digit increases. So what's up? The better question is, what's down? How about the financial ability of the middle-class buyer? This is the demographic that buys cars like these to afford them. Or perhaps more to the point, their willingness to buy them. Interest rates are still low. Gas is still cheap. But such things don't matter when you can't afford the car itself, or begin to fear not being able to afford other, more important things, like the monthly mortgage, or, more coming, your Obamacare premium. These are not practical cars. They are muscle cars, largely useless for anything except having fun. And what is the first thing most families do when they begin to feel uneasy about their finances and their financial future? They stop spending money on things they don't need. And no one needs a muscle car. They are indulgences. Cars people buy when they feel good about their finances, when there is money to spare on something fun. Fun is the first casualty of a financial bubble's popping. Thank you for tuning in for this week's Santu Pirls Stock Market Commentary, featuring the proprietary bull-bear point and figure market breadth summary chart compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.